It's not exactly breaking news at this point, but Turkey is in an awful position. Their economy has been collapsing in front of our very eyes, and usually for this type of stuff, it is blindingly obvious why it is happening. Now, if you're new to this channel, then you might not know this, but in general, I spend a lot of my time shedding light on governments who do more to hurt their citizens than to help them, and what we're seeing in Turkey right now is exactly that. It's a tale as old as time. Officials with authority who are destroying the country they claim to care for with a mixture of negligence, malice, delusion, and just downright stupidity. Today, we're going to tackle the topic that is the Turkish economy, the Turkish lira, the Turkish government, and we're going to explain in its entirety what's really going on in Turkey today. But before I jump into today's video, I want to thank the Daily Upside for partnering with my channel. The Daily Upside is a free business and finance newsletter that I actually use every morning to help get an edge on the latest business news. Check out the link in my bio to subscribe for free. And also, make sure to leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like private live streams, extra videos, and buy and sell alerts for my own personal portfolio. And if you sign up before December ends, then the next month will be entirely free. Now, the first thing to note about the problems going on in Turkey today is that they aren't happening in a vacuum, and they aren't happening for the first time either. Very similar events have happened in Turkey before, and the reasons, the causes and effects of these events have all been seen before as well. The old adage, history doesn't repeat itself, but it does rhyme, comes to mind here, and really understanding the backdrop to all this is imperative in really understanding what's going on right now. Go back 50 years and Turkey suffered under really high inflation for around 3 decades. In some years it peaked as high as 100%, but for that entire period, from the 70s, 80s and 90s as well, inflation was sitting between 30 and 80%, which I'm sure you all know is simply awful. The country was suffering from a number of problems, all of which compounded with each other to make solving them even more difficult. It's hard enough to tackle inflation when there's a potential political crisis going on, but when the Turkish lira, the currency of the country, is collapsing as well, it can seem nigh on impossible. Now, we're not actually going to go into great detail here because the truth is, this isn't the 70s anymore. And while it is worthwhile knowing that a short while ago, this sort of economic environment was actually normal for Turkey, what wasn't normal was Turkey's relative prosperity and strong economic growth throughout the noughties and the early 2010s. The country actually developed as a developing country is supposed to, and it got to the point where it was looking like it might leave its turbulent economic history in the past. Unfortunately though, political instability returned to Turkey, and that's really where today's problems start, with an administration that is bordering on a full-blown dictatorship where the authorities seem to have no interest whatsoever in acting in the interest of the country, but purely in the interest of themselves. So what precisely is going on? Well, it's being called the Turkish currency and debt crisis, and it is exactly what it sounds like. Turkey is going through a crisis that has so far seen huge levels of inflation, rising borrowing costs that has corresponded with lots of loan defaults, and as a result, the people on the ground are suffering. They're seeing their savings disappear, their wages decrease by the day, and they're unable to really do anything about it. The problems stem from the country's large current account deficit, loads of debt taken out in other currencies, and the administration's, or I should say Erdogan's, unorthodox or just downright insane interest rate policies. Now, for those of you who don't know, a current account, when we're talking about countries at least, refers to the value of exports and imports of goods and services and the transfer of capital. Basically, it's used to measure how much money is coming into the country compared to how much is going out of the country. And if the country has a deficit, that means that there's more going out than there is coming in. In Turkey's case, the country has always suffered with a huge current account deficit, which reached $51 billion in 2018, making it one of the largest deficits in the world. The economy was relying on capital flowing into the country from foreign investors, which funded the businesses that made up the economy. Turkish banks and corporations were borrowing huge amounts of money every year, usually in foreign currencies like the US dollar. Now, without this constant inflow of capital, the economy would dry up, and that's what started to happen over the last few years. Erdogan, the de facto dictator, is not the most politically inclined person, and he's been picking arguments with foreign leaders constantly for years now. Foreign leaders who just so happen to be running countries that were the sources of this inflowing capital. In 2016, there was a supposed coup attempt in Turkey, where some parts of the military sought to oust Erdogan. Now, I say supposed because this has all devolved into hearsay, and there's actually a fair chance that this coup was orchestrated by the administration itself in power as a sort of false flag attack in order to seize absolute control. Germany's intelligence chief and the British Parliament Select Committee revealed that they have found no evidence to suggest that Gulen, the supposed mastermind behind the coup, was the real culprit. Whether or not this is the case, however, really isn't too relevant, to be honest. The coup failed, whether it was real or not, it was not successful. Erdogan maintained his stranglehold on power and actually increased it, to be honest, and purges of those who might have been sympathetic to the coup began. There were around 40,000 immediate arrests, including 10,000 soldiers, and almost 3,000 judges for reasons we still don't know. 35,000 teachers were banned from working in education, and after a couple years the number of arrests had risen to 77,000, with the number of people ousted from their work sitting at over 160,000. The Turkish government used the coup as reasoning behind huge amounts of asset seizures on what were tenuous grounds at best. Erdogan's increasing authoritarianism has been scaring off investors, causing inflowing capital to reduce year by year, creating a real problem for the country. It really doesn't help that free press is practically non-existent in the country today, and there is little to no transparency behind the financial figures provided by the Turkish government. Basically, what this all meant is that the country's biggest institutions, banks and corporations, were sitting under mountains of debt with no real way to grow and expand at the pace needed to pay these obligations off. Now, before I go any further, I want to thank the Daily Upside for partnering with me on this video. The Daily Upside is a free business and investing newsletter that over 200,000 people subscribe to, myself included. The Daily Upside was founded by a team of former investment bankers, scholars and journalists with the intention to provide color and clarity to help investors sift through the noise of the financial news space. Instead of pushing clickbait financial headlines and biased coverage that traditional outlets have gotten used to, the Daily Upside provides actionable insights and clarity on the stories shaping the business world. Every weekday they deliver a morning brief, followed by more detailed stories that are shaping the business world. I started reading the Daily Upside 3 or 4 months ago, and now it has become the first thing I read when I wake up in the morning. It's about a 5-minute read that isn't afraid to dive deep into the hot topics and give real, high-level, unbiased analysis with the occasional dose of wit to keep things interesting. Recently, I've even been enjoying their weekend edition newsletter that goes a little bit deeper into niche industries. This past week, they dove into the health and wellness sector, which covered everything from Peloton's M&A strategy to Apple's future in fitness. As someone who looks to stay on top of news to help create videos like this one, I can't recommend the Daily Upside enough. Click the link in my bio and join the 200,000 other people that read the Daily Upside every morning. It's free, and if you don't love it, you can always unsubscribe. So why is this inflation in Turkey so high, and why does it just keep spiraling out of control? Well, it all really comes down to is the monetary policy that Erdogan is pursuing, and that is lower interest rates. Low interest rates incentivize spending, and they de-incentivize saving. That forces people into the streets to spend their money, which increases pricing pressure and forces prices up. It forces businesses to invest more into themselves, as sitting on cash is a losing strategy, so they go out and hire more people, increasing pressure on wages, and that causes more inflation. Low interest rates incentivize borrowing, as the repayments you make are often less than the devaluation of the currency itself. So why wouldn't you borrow some cash? And that cash is of course used, it's spent, and that once again increases inflation. When the currency devalues due to all this inflation, it makes importing products more expensive, and that adds to pricing pressures as well, especially when the country is heavily reliant on imports like Turkey is. All of these pressures play off each other as well and increase the levels of inflation even further, but really it all started with policy and with Erdogan. Now, Erdogan seems almost obsessed with interest rates, and it's not entirely clear why, but there are a few different potential reasons at play here. Firstly, Erdogan is a Muslim, and he's been pushing Turkey closer towards the teachings of Islam ever since he's been in power, and a big part of Islam is the belief that interest, charging money in exchange for lending money, is immoral, that it's wrong, and that it's usury. He's said a few things in the past which make it seem like this might have some bearing on why he's pushing for lower interest rates, as it's likely he does believe they are wrong. To be perfectly honest though, I don't think a man as morally bankrupt as Erdogan is actually bothered about usury. He's imprisoned thousands of people against their will with no justification. He's been targeting the Kurdistani ethnic group in what basically amounts to a minor genocide, and has been an outspoken genocide denier when it comes to the Armenian genocide committed around 100 years ago. The idea that he has a moral compass and is trying to push the country in a direction that agrees with his view on morality, in my opinion, really doesn't stand up to any level of critical thinking. I think the reason he talks about usury and the teachings of Islam is purely to garner support from his populace who is majority Muslim. He's just buying support by pretending to care about the same things as the people on the ground, but it's all just far too transparent. So if it isn't Islam, then what else could it be? Well, personally, I think it's a mixture of Erdogan trying to emulate the apparent success that China has seen over recent decades, along with just some awful understanding of economics and policies which are just mistakes and nothing more. And we'll start then with the mistakes, the ideas that Erdogan has which just don't make any real sense. Here, Erdogan basically thinks that lower interest rates will lead to a richer Turkey, and the basic idea behind this is right, kind of. Lower interest rates allow for businesses to invest in themselves, to build infrastructure, for people to borrow money cheaply and spend more. Lower interest rates leads to economic growth. The problem is that interest rates being too low can actually be detrimental for an economy, as it leads to inefficient allocation of capital. Essentially, when money is so cheap, every worthwhile investment has already been made, so capital starts to get allocated to less than worthwhile pursuits. Bridges that aren't necessary, roads to nowhere, and skyscrapers with no one to live or work in them, and that's a big part of what Turkey has seen over recent years. On top of all that, lower interest rates lead to inflation as all of this extra money finds itself flowing around the economy, and this is something that almost everyone in the world accepts, everyone except Erdogan. His idea here is that lower interest rates will fuel an export boom in Turkey thanks to the depreciation of the lira, and that will in turn Turkey into a net exporter instead of a net importer. They will sell more stuff to foreign countries than they will buy from foreign countries, basically. Now, the idea that a devaluing currency makes exports more attractive is correct, but Turkey is far too dependent on imports for this to actually help the country, and the devaluation of the lira has led to ridiculous price hikes for everyday items that people need to survive. Yes, exporters have done okay throughout this, but everyone else has been suffering, all in a sort of weird attempt to become an export-driven economy and improve the current account deficit. Now, the real motivation behind this, and I have to stress that this is just my opinion, it's just my theory and it's in no way confirmed to be true, but I think this all stems from Erdogan's belief that he can replicate the success that China has seen over the last few decades. China obviously grew into the industrial workshop of the world. It became the world's largest net exporter and created huge amounts of wealth in doing so, and that's something that Erdogan has actually claimed to be targeting as well. He's explicitly said that he wants to make Turkish exports more appealing abroad and boost domestic manufacturing. Now, China, in an attempt to make its exports artificially better value than competitors, devalued its currency consistently for decades, and that seems to be what Erdogan is doing here, only the Turkish lira isn't pegged to any specific value, so he has to manipulate the currency using other means, namely interest rates. China financed absolutely huge construction projects and is still planning more into the future, including some of the largest bridges and dams in the world, and railways and roads that seemingly go on forever. And we've seen Turkey follow a similar principle of trying to build out infrastructure to the benefit of the economy. China fueled a property bubble, the likes of which the world had never seen, culminating in those now infamous ghost cities scattering the otherwise barren inland provinces of the country, and Turkey has actually followed that route as well. While there aren't exactly ghost cities in Turkey, there are ghost towns, entire developments built to propagate a housing market boom that just never materialized. More skyscrapers than there are people to occupy them, and government policies that manipulate mortgage interest rates to try and force demand for property to artificially high levels. The similarities between Erdogan's Turkey and China are far more common than you might expect, and I think there's a reason for that. I think Erdogan is trying to replicate China's apparent success, but the big problem here is that they're replicating China's apparent success. It's no secret that today the Chinese housing market is falling apart. Their stock market is dropping every day and the economy is looking like it's about to be on its knees. Authoritarian governments have the incredible ability to slow down a country's collapse, to delay it as long as possible, to hide it and pretend it isn't even happening, but in the end, these states always fail. Turkey is copying a bad idea. They're looking over at their neighbors' test answers, unaware that their neighbors are going to fail as well. China's ridiculous debt-fueled property bubble is not going to create long-term prosperity, and we are literally watching that idea fall apart before our eyes. It's no wonder why, then, that Turkey has seen a similar property bubble, one that is also on its way out and will pop as soon as the state pulls away their support for it. Now, if I had made this video a few weeks ago, this probably would have been the end of it. But just a few days ago, Erdogan and the Turkish government came out with a few new policies to try and improve the situation. Basically, the government is trying to ease concerns people have about their savings being eroded away by inflation. And to do this, they're putting out a savings account that will supposedly protect your savings by guaranteeing that if the lira continues to devalue, then the government will make up these losses, if they are greater than the interest rate set by the central bank. Basically, you lock your money in a bank account for 3 months, 6 months, or maybe even a year, and you get interest on your savings, something like 14%. If, however, the lira devalues by more than 14%, then the government will reimburse you for that loss. This will basically mean that it will be like you're holding US dollars instead of the Turkish lira, as you won't suffer if the lira continues to devalue. Now, why is the government putting this scheme out there, especially when they've been basically asleep behind the wheel up until this point? Well, Turkish citizens are losing faith in the lira. They would rather hold US dollars, euros, gold, or almost any other currency, as the chances are they'll perform far better. The scheme should also increase savings rates in Turkey, which is notably very low, and that will hopefully reduce spending and thus inflation. The problem with this idea is that interest rates are still being cut, and it doesn't look like real rates are going to be raised anytime soon. This scheme will be sort of a halfway house, making interest rates for savings higher in practice, but interest rates for borrowing are going to stay low. So I have serious doubts about whether or not this policy shift will actually work. Now, we did see the Turkish lira jump on the news of this new scheme, likely because it provided investors, consumers and producers some degree of confidence that the Turkish government was going to take at least some action to fight inflation. But since that jump, the lira has started to slide again, and it's pretty much sitting at where it was at the beginning of December. I personally have serious doubts about this policy. I don't think it's going to be enough to restore confidence in the lira, and I don't think it's going to be enough to quell inflation either. Whether or not I'll actually be right on that prediction is a very difficult thing to say, because really, this is all in the hands of Erdogan. We aren't betting on consumer confidence, we aren't betting on forecasted GDP growth, but we are betting on the actions and the desires of one man. The big thing here, the big takeaway, is that this is all actually a very fixable problem. Turkey is not doomed to failure. It isn't doomed to another 3 decades of economic turmoil, and there is a ray of light at the end of the tunnel. The problem is that Erdogan is standing in front of that light. He's made it clear that his word is final. When the previous heads of Turkey's central bank fought back against his policies, he simply had them replaced with someone more pliant. Turkey can pull itself out of this mess, if only Erdogan would allow that to happen. Maybe he'll have a change of heart, maybe he'll renounce his previous policies and turn to the IMF for help, but despots, dictators and tyrants tend not to be the humble types. As far as my guess goes, I suspect Erdogan will hold on to power for as long as possible. He'll place blame on everyone except himself. He'll blame foreigners, the United States and Russia at the same time. He'll claim it's all the fault of evil loan givers and usurers. He'll continue to flame the tensions between the Kurds and the Turks and will use the hatred he implants in his people to distract them from the problems that he has caused. Sadly, Turkey shouldn't be in this position, and its people shouldn't be suffering like this either. But as long as Erdogan remains in power, I suspect that nothing will really change. Finally, I just want to give the Daily Upside one more thank you for partnering with this video. If you haven't subscribed already, click the link in the bio to receive their weekday and weekend edition absolutely free. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. and if you join before December ends, then the next month will be entirely free, but this offer only stands for a couple more days. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world-famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It is completely free to sign up. You don't have to buy anything. You don't have to hand over any card information. So if that sounds interesting, then make sure to check it out. There's also a link in the description to BLOCKFI, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you'll get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.